Friends, a host of notifications and circulars have been issued in the last week apropos the recommendation of the 53rd GST Council meeting. In this video, we would discuss 5 very critical issues, notifications and circulars which would impact trade and industry at large. The most critical issue which has been clarified apropos the 53rd GST Council meeting is the issue of applicability of GST on corporate guarantees. Now, as you are all aware, while notifying Rule 28 Sub Rule 2 and issuing the corresponding circular in October 2023, it has been clarified that in case of corporate guarantees, 1% of the value of the corporate guarantee amount would be considered to be as the deemed value when there is a provision of corporate guarantee from the guarantor to the guarantee. The question was whether this clarification and valuation rule was even prospectively applicable. It has been clarified that GST on corporate guarantee would be applicable as the supply of service even before October 2023. However, the value would be determined as per the erstwhile Rule 28. Therefore, before October 2023, the value in case of corporate guarantee provision from one related party to another related party would be considered to be as the open market value of such supply or the value of service of like kind of quality, or it would be determined under Rule 30 or 31. However, the most important thing to note is the second proviso to Rule 28 as existed before October 2023, which provided that in case the related party which is receiving the service is eligible for full input tax credit, in such case the value as mentioned in the invoice, whatever may be the value, would be considered to be as the transaction value for GST purpose. Thereafter, as clarified by Circular 199 read with Circular 210 of 2024, if we apply the same analogy, then before October 2023, even if no invoice was issued in case of supply of services of corporate guarantee, then the transaction value would be considered to be as nil. After October 2023, Rule 28(2) has now been retrospectively amended. Now, proviso to Rule 28(2) has been notified by Notification 12 of 2024, wherein it has been provided that where full input tax credit is eligible to the related party, then even though the deemed value of service of corporate guarantee is considered to be as 1%, but in this specific case, when full input tax credit is available to the recipient of service, then whatever value is declared in the invoice would be considered to be as the transaction value for GST purposes. And as clarified under Circular 199 or 210, it is our legal submission that even in case there is no invoice which is raised, in such cases the value would still be considered to be as nil. Therefore, we understand that this valuation issue to such extent has now been amply settled. The next issue which was raised by trade and industry was whether full input tax credit would be available to the recipient of the service in such cases. It has been clarified that subject to other limitations and conditions of the GST law, full input tax credit would be eligible in case of supply of services of corporate guarantee and the transaction value which has been reported in the invoice. The another question was, in case say the value of the corporate guarantee is 400 crores, however the loan which is taken against such corporate guarantee is only a part of it, say 100 crores. In such case, whether this deeming 1% value would be applicable on the corporate guarantee or the loan amount. In my example, the value of 1% would be applicable on the corporate guarantee amount of 400 crores and not on the loan amount of 100 crores. Hence, the value of corporate guarantee in my example for GST purpose would be 4 crores and not 1 crores. Whether the corporate guarantee value would be considered to be as per annum or one shot in case where no requirement is there for renewal of the corporate guarantee per annum. It has been clarified that in case, say for example, the corporate guarantee is provided one shot for 5 years. In such cases, the value would be considered as 1% per annum. So again, in my example, in case the value of corporate guarantee is 400 crores and it is renewable in 5 years, then the value would be 5% of 400 crores and not 1% of 400 crores. In case a loan is taken over by one bank from another bank, then there would be no impact of GST on the services of corporate guarantee as there is no renewable of corporate guarantee. Again, the question was, in case of a corporate guarantee which is provided by a foreign related party, then it has been clarified that GST would be applicable on RCM basis. However, in case of export of services where corporate guarantee is provided by an Indian entity to its foreign entity, then no GST would be applicable as per the amended section or Rule 28 Sub-Rule 2. In case the corporate guarantee is provided by co-guarantors, then the value of 1% would be divided amongst the co-guarantors proportionately, as has been clarified by the circular 2025 of 2024. So we understand, friends, that for the purpose of corporate guarantee GST, this circular 225 of 2024 has amply clarified the issues raised by trade and industry. The second critical issue which has been notified and as a relaxation for trade and industry is that in any month, if you have a negative outward tax liability, say for example in July 2024, you only have a GST credit note to report and no invoices to report. In such cases, GSTR3B would not allow to carry forward the negative figures. Now a provision has been made wherein negative figures can be carried forward and such negative outward tax liability would be automatically carried forward to next GSTR3B and it can be adjusted in table number 6.1 of the next GSTR3B against output tax payable. Third critical amendment is, as you all know, that from December 2022 as per Rule 37 capital A, even if the recipient does not file its GSTR3B but has filed the GSTR1 and the value of input tax credit is auto-populating in your GSTR2B, then you can take the input tax credit provided the supplier has filed the GSTR3B by 30th of September. In case he does not do so, then you have to reverse the input tax credit by 30th of November. Now, a special table has been inserted in GSTR2B which will auto-populate this reversal of input tax credit, which you have to do by table 4B2 of GSTR3B. A very important rate notification and amendment for all manufacturers is the reduction of GST on cartons, boxes and cases made of either corrugated or non-corrugated papers. The GST rate in these cases have been reduced from 18% to 12%. So, while on the one hand the suppliers from 15th of July 2024 will charge you a lesser GST rate, on the other hand the recipient manufacturers or recipient taxpayers may be advised to negotiate with their suppliers for passing on the benefit of the reduced rate, because there would be no curtailment of the input tax credit available with the suppliers in such case. Mind that the sunset clause for anti-profiteering under GST is 31st of March 2025. So, still some time to go for anti-profiteering to be sunsetted in the GST regime. Till such time, the benefit from reduced rate under GST have to be passed on to the recipients. Fifth and final critical point is for those taxpayers who get an order against them from the first stage authority. In such case, the department sometimes goes for recovery proceedings since the appeal is not filed, as the GST tribunal has not been formed. Now, it has been clarified by Circular 224 that the pre-deposit in such cases need to be paid after the recommendations of the 53rd GST Council meeting at the rate of 10%, while DRC3, after you paid through DRC3, then you have to give a declaration and an undertaking to the department that you would prefer an appeal before the GSTAT when it is formed. If you pay the amount and provide an undertaking, then there would be an automatic stay till the GSTAT is formed. However, after the GSTAT is formed and notified, then within 3 months you have to file an appeal. In case you do not file an appeal within 3 months, then the recovery proceedings can be started at that point of time. However, a new form DRC3A would be is notified already in fact, and would be available on the GST portal soon. Once this form DRC3A is available on the GST portal, then whatever taxes you have paid now via DRC3, you have to route via DRC3A. There is a specific procedure which is clarified by Circular 224, which you might go through as to how to route the payment made through DRC3 through DRC3A. For those taxpayers who have erroneously paid the pre-deposit through DRC3, once DRC3A comes on the GST portal, then you can route the DRC3 payment of pre-deposit through DRC3A also, even in case you have filed an appeal with the first stage authority under 107. However, in case the proceedings have been already concluded, in such case this facility is not available. So friends, these are the various important and critical developments in the last week which have been notified and clarified through various notifications and circulars. Please do also go through our detailed analysis on our social media channels in LinkedIn, Facebook, etc., where we have uploaded the corresponding document of our analysis. Do like, share and subscribe to this channel. Stay tuned. Thank you very much.